ultimately, gold and silver go higher in the face of a dollar that falls. And I don't know if it's gold and silver going higher as much as what JP Morgan is saying is that the dollar has to fall. And that's really what I think ultimately will happen. Now, when you look at what's happening around the globe, the de-dollarization, the de-treasurization, a growing union of countries, as we've talked about forever, why would anyone want to hold treasuries? You look at gold, it's up 9.9% on average for 25 years. That's doubled the value, the pace of the 10-year treasury. And we've proven to the world that we don't like what you're doing. We'll take your treasuries and might even give them to the country or buy weapons with the proceeds and give to the country you're in a war with. That's a very tough thing to come back from. So I think ultimately it leads to more of the same. Countries seeking alternatives to the dollar, seeking alternatives to the treasury. Read Zoltan Pozsar. This is Bretton Woods 3, all about commodities. And it's also a country that has obligations that will be very difficult to meet just from tax revenue. So where are your options? Raise taxes, print money, and selling treasuries in an environment where there's only $8 trillion in treasury holdings that are foreign held. The majority of it is owed to us. Foreigners are not really keen. Now, there are some countries, if we are to believe that UK and Ireland and Cayman Islands are keen on holding our treasury debt, but the ones that have been responsible for funding our spending binge, I think those numbers might even prove to be low. Ultimately, gold and silver go higher in the face of obligations by this country that can really probably only be met through printing of money or monetization of bonds. Same thing, because just no one wants to hold our treasuries because of inflation risk, default risk, and outright confiscation risk. And I think that's really where I don't think we've seen anything yet, I guess, is the bottom line. And I'm happy with those numbers. But when you realize that, gold right now has replaced the euro in terms of the second largest asset held by central banks right now for the first time ever, 18% allocation to central bank holdings, if we believe those numbers, the writing is on the wall. Gold and silver are replacing many traditional assets along with other commodities too. As Zoltan Pozsar says, this is about real commodities, no longer promises from countries that are bankrupt morally, socially, and actually. And I think that portrays for much higher prices in gold and silver, even than Bank of America or JP Morgan optimistically are telling us. I think it's you look at the amount of gold that China's been accumulating, and we're only supposed to believe and producing that they have 26 or 2,700 metric tons. They have way more than that, and their banks are accumulating it and doing so in a manner that isn't reported to the IMF. Why would anyone tell the IMF exactly how much they have? And people have been saying China's been underreporting it forever.
Andy Schectman emphasizes the strategic acquisition of gold and silver by countries such as China, Russia, and Saudi Arabia. These nations are selling us treasuries and investing heavily in precious metals. Why? Because gold and silver offer stability with no counterparty risk and are immune to sanctions. Unlike us treasuries, which have seen declining performance, gold has outperformed consistently since the turn of the century. Schectman highlights the historical performance of gold, noting its ability to retain purchasing power even through periods of significant inflation. For example, in 1960, an ounce of gold was priced at $39 and could buy an average house valued at $17,000. Fast forward to today, and that same ounce of gold, now worth over $2,000, still holds substantial value, unlike the depreciated dollar. Countries around the world are shedding us treasuries, a trend driven by poor performance and geopolitical tensions. Major holders like Japan, China, Saudi Arabia, and Russia have reduced their holdings, and us entities such as hedge funds and mutual funds are stepping in to fill the gap. This shift undermines the U.S. financial stability and its reserve currency status. Schectman explains that the U.S. government's ability to confiscate treasuries from adversarial nations has further eroded trust. As a result, many countries now prefer gold and commodities, which are not subject to the same risks. Schectman discusses the growing influence of BRICS nations Brazil, Russia, India, China, and South Africa and their efforts to move away from the U.S. dollar. These countries are engaging in bilateral trade agreements that bypass the dollar, such as Saudi Arabia selling oil to China for yuan, which can be converted to gold on the Shanghai Gold Exchange. This shift erodes the dollar's dominance and strengthens the position of gold.
You look at the central banks, they are buying gold hand over fist, but also equally as impressive to me. Everyone always said China underreports, China underreports. Alistair McLeod says, that they have 40,000 metric tons. Or thereabouts, 5 times what we do, and of which the state owns 20 and the people own 19. But I look at like India as an example of what's really happening. They bought 1.5 times the amount of gold in the first 4 months than they did in the entire year last year, but they repatriated 100 metric tons from the Bank of England, which by proxy is the London Bullion Metals Exchange. And all of these countries in Africa, including Saudi Arabia and Egypt, have repatriated their gold from the New York Fed, i.e. the COMEX. So it's not only the accumulation by the most well-informed traders, it's also the repatriation, the removal of counterparty risk. And that's a lot, I think, what Zoltan Pozsar is talking about. That's why it's commodities. We've broken trust. And I think that's the most important thing. When the central banks say we're going to keep buying, sure, I would argue that the numbers that we all are led to believe are way underreported. The IMF says that. The analysts at Bank of Montreal says that. And everyone has said that about China in particular for years, going back as far as I can remember. So I would simply say that there is no reason for gold to have been reclassified Tier 1. And when I say gold, silver is part of gold. And as one goes, so too will the other ultimately, for different reasons now. But one's not going to the heavens without the other one coming with. But I think when you see the repatriation, it speaks volumes. It's about the loss of trust. This is what it's all about, the loss of trust. And can you put Humpty Dumpty back together? Don't know. The trust is something that I think is very difficult to get back once you break it in any form of life, whether it be relationships or in this case, the world reserve status or the center of free trade. People look at this country differently now. Maybe the most important way is the risk of having assets in treasuries as savings. Instead, they're looking at commodities, which I think have no counterparty risk, and the relevance of how important they are moving forward. I think Zoltan nailed it. So yeah, it doesn't surprise me the central banks say that, and I would argue that they're buying way more than they're telling us and producing more than they're telling us. So, tell us just enough to keep us interested. But if we really knew how much the Chinese were buying or any of these countries, the price would go parabolic. And it's in all of their best interest during the accumulation phase to be tight-lipped about that and not be genuine. Doesn't do them any good to do that.
Central banks worldwide are purchasing and repatriating gold at unprecedented levels. These actions reflect a loss of trust in the U.S. financial system and a move towards assets that inspire confidence. The Bank of International Settlements has reclassified gold as a Tier 1 asset, further underscoring its importance. Schectman predicts that the manipulation of the gold market will end as more countries demand physical delivery of their metals. This shift will likely lead to a significant rise in gold and silver prices, driven by increased global demand. On a personal note, Schectman shares his father's advice on financial sovereignty: consistently invest in gold and silver. He credits this practice as the best financial decision he's ever made, emphasizing the importance of methodical and disciplined investment. He argues that precious metals are not just a hedge against inflation, but a long-term strategy for preserving and growing wealth. Andy Schectman's insights reveal a world in transition, where gold and silver are becoming increasingly vital in the face of declining trust in traditional financial systems. As countries pivot away from U.S. treasuries and the dollar, precious metals offer a stable and secure alternative. For investors, understanding these dynamics and strategically investing in gold and silver can provide a safeguard against economic uncertainty.